Investment risk, the monster under every investor's bed. It's that creepy feeling when you buy a stock and pray it doesn't tank. But what if I told you that managing risk is like learning to ride a bike? Scary at first, but once you've got it, it's smooth sailing. No face plants. So strap in. In the next 3 minutes, we're going to show you how to manage investment risk without breaking a sweat. So what's investment risk? It's basically the what-if game, but with your money. What if the market crashes? What if inflation eats my savings? What if I pick the next Enron? Yeah, risk can be terrifying, but the truth is, risk is how you make money. No risk, no reward. It's that simple. All right, here's the deal. There are different flavors of risk. Let's meet the crew. Market risk. You're playing against the whole market, like trying to control the weather. Sometimes it's sunny, sometimes it's a tornado. Good luck. Interest rate risk. You're cruising with bonds? Keep an eye on interest rates. If they go up, your bonds might go down faster than yesterday's hype stock. Inflation risk. Remember when candy was cheap? Well, inflation is like a slow-motion thief, stealing your purchasing power over time. Specific risk. This one's on you. You invest in a bad company? Well, it's like buying a house built on sand, even if the price of housing goes up. Yours could tank because it sank. All right, now let's tame this wild animal. Here's your go-to playbook for managing investment risk. Diversify or kick the bucket, not literally. Don't put all your eggs in one basket. Spread those investments across stocks, bonds, real estate, whatever. If one thing tanks, others can save your hide. Know your risk tolerance. Don't freak out. How much can you lose before you lose it? If you can handle some heart-pounding drops, cool. If not, keep it safe and steady. Invest like you, not like your fearless uncle who buys meme stocks. Think long-term, slow and steady. Forget day trading unless you're a glutton for punishment. Patience is the name of the game. The market will go up and down, but if you hold strong, you'll get where you want to go. Stay informed but chill. Be smart. Keep up with the news, but don't be that person who refreshes their portfolio every 5 minutes. Set a time to check in and relax the rest of the time. Don't time the market because you can't. Timing the market is like trying to catch a falling knife. Good luck with that. Instead, go with dollar cost averaging. Buy consistently, ride the waves, and you won't sweat the peaks and valleys. Emergency fund, aka your safety net. Before you even think about investing, set aside some emergency cash, like 3 to 6 months of expenses minimum. That way, when life throws you a curveball, you're not selling your stocks in a panic. So there you go. Investment risk isn't the nightmare everyone thinks it is. Manage it right, and you're in control. Diversify, stay calm, have a plan, and don't bet the farm on the next big thing. And remember, patience pays off more than panic ever will. Don't forget to leave a like, a comment, and a sub to the channel for more content like this.